Hello students, this is Padmavati Indargi, Assistant Professor of Management from Government First Grade College, Devanahalli. Welcome you all to the 14th session of Advanced Financial Management. This is regarding the cost of capital and capital structure unit. In this you are going to study different concepts of cost of capital. The outcome of this session is to make you understand the various concepts of cost of capital, how the cost of capital is classified in various forms. In previous session, we have seen the meaning of cost of capital. Cost of capital is the minimum rate of return that the firm needs to earn from the project in order to meet the cost. As we all know, for every investment we raise, for every fund we raise, we need to pay in return back in the form of interest, in the form of dividend. So whenever we are evaluating the investment project, we need to evaluate from the point of cost of capital. So we also seen the components of cost of capital. It includes equity shares, debt debenture, the debt capital, preference shares, retained earnings. These all makes the component. The cost of capital includes all these components, and also it includes retained earnings, which the company has retained the profit instead of paying the dividend, that is retained earnings. And also we have seen the significance, the importance of cost of capital, where cost of capital is used as a yardstick. It is used as a yardstick to measure the performance of the project. It shows how best the top management is making the decisions for accepting the project. It helps in designing the capital budgeting. It helps in designing the capital structure of the company. It helps in evaluation of the projects. It helps in selection of the projects, which is best project. It helps in giving a light to the management in selecting the projects. In today's session, we'll see what are the different concepts, how cost of capital is classified. It is classified, or the different concepts of cost of capital are explicit and implicit cost, average and marginal cost, historical and future cost, specific and combined cost. Let's see its meaning. Explicit cost. Explicit cost is the rate. It is the rate that the firm pays to procure financing. Means whenever we are raising the funds, we need to pay them in return the rate. It is the rate which we are paying for acquiring the funds. This is the rate which arrives at the time of procuring the funds. An explicit cost is one that has occurred and is evidently reported as a separate cost. It is defined as direct payment to others in doing business, such as wage, rent and materials. Means it is an open cost. Explicit cost is the cost which we incur while acquiring the resources, or it may be the cost which we pay for taking the service. It might be rent, it might be wages and materials. For acquiring the materials, we are paying the cost. That is, explicit cost is the open cost which arises at the time of borrowing the funds. It is the discount. Explicit cost is the rate at which the present values, the cash flows, are discounted. So explicit cost is the open cost, or it is the cost which we have to pay while getting the resources. Then what is implicit cost? Implicit cost is the hidden cost, or implicit cost means which is hidden, which is not open. It is the rate of return linked with the best investment opportunity for the firm and its shareholders that will be inevitable if the projects presently under consideration by the firm were accepted. Means if there are two projects where we have to make only one selection, where we need to take only one project, then if while taking that project we are foregoing the other project. So if that project is best and we have sacrificed that project, means it is the cost of losing that profitable project because of accepting the present project. ಅಂದ್ರೆ ಎರಡು ಪ್ರಾಜೆಕ್ಟ್ ಇದ್ದಾಗ ಈಗ ಒಂದು ಪ್ರಾಜೆಕ್ಟ್ ಅನ್ನ ನಾವು ಎಕ್ಸೆಪ್ಟ್ ಮಾಡ್ಕೊಂಡು ಅದ್ರ ಮೇಲೆ ಇನ್ವೆಸ್ಟ್ ಮಾಡ್ತೀವಿ. ಇನ್ನೊಂದು ಪ್ರಾಜೆಕ್ಟ್ ಇರುತ್ತಲ್ಲ, ಆ ಪ್ರಾಜೆಕ್ಟ್ ಅನ್ನ ಬಿಟ್ಬಿಟ್ಟಿರ್ತೀವಿ. ಅದು ಏನಾದ್ರೂ ಬೆಸ್ಟ್ ಪ್ರಾಜೆಕ್ಟ್ ಆಗಿದ್ರೆ ಆ ಪ್ರಾಫಿಟ್ ಅನ್ನ ನಾವು ಇಲ್ಲಿ ಆ ಪ್ರಾಫಿಟ್ ಅನ್ನು ನಾವು ಲೂಸ್ ಮಾಡ್ಕೊಳ್ತೀವಿ. ಸೊ ದಟ್ ಈಸ್ ದ ಕಾಸ್ಟ್ ಆಫ್ not taking that project and selecting the present project is that cost. We should take into consideration that cost. That is the cost. It is the cost which is attached with the foregoing ಬಿಟ್ಟಿರೋದಕ್ಕೆ ಅದೇನು ಕಾಸ್ಟ್ ಇರುತ್ತೆ ಆ ಕಾಸ್ಟಿಗೆ ನಾವು ಇಂಪ್ಲಿಸಿಟ್ ಕಾಸ್ಟ್ ಅಂತ ಹೇಳ್ತೀವಿ. Next is average and marginal cost. Average cost of capital is the weighted average cost of each element of capital employed by the company. It reflects weighted average cost of all kinds of financing such as equity, debt, retained earnings. Average cost means what? Whatever the different types of capital we have raised in the form of equity, in the form of preference, in the form of debentures, in the form of retained earnings, we have taken the proportion, means we are taking the average cost by taking all the cost, by adding all the cost of each source. We are dividing by the number of source, then the cost of capital what we are getting is average cost. And it is the average cost of capital. It's the average cost of capital where we are taking the weighted average of each element of capital employed. Where we are giving a single figure for all the sources, we are explaining in one single figure, that is the average cost. Next is marginal cost. Marginal cost is the weighted average cost of new finance raised by the company. Marginal cost is attached with the additional funds. Additional ಒಂದು ಫಂಡ್ಸ್ ಅನ್ನ ರೇಸ್ ಮಾಡಿರ್ತೀವಿ ಒಂದು ಪ್ರಾಜೆಕ್ಟ್ಗೆ, ಮತ್ತೊಂದು ಅಡಿಷನ್ ನಾವೇನಾದ್ರೂ ರೇಸ್ ಮಾಡ್ತಾ ಇದ್ದೀವಿ ಅಂದ್ರೆ ವಾಟ್ ಈಸ್ ದ ಕಾಸ್ಟ್ ಇನ್ಕರ್ಡ್ ಫಾರ್ getting the additional capital. It is the extra rupee which we are paying for acquiring the extra fund. It is the extra cost of capital when the company goes for further raising of financing. ಇಷ್ಟು ಕ್ಯಾಪಿಟಲ್ ಬೇಕು ಅಂತ ಒಂದು ನಾವು ರೇಸ್ ಮಾಡ್ಕೊಂಡಿರ್ತೀವಿ, ಇದಕ್ಕೆ ಒಂದು ಕಾಸ್ಟ್ ಆಫ್ ಕ್ಯಾಪಿಟಲ್ ಇರುತ್ತೆ. ಇನ್ನು ಎಕ್ಸ್ಟ್ರಾ ನಾವು ಏನಾದರೂ ರೇಸ್ ಮಾಡ್ಲಿಕ್ಕೆ ಹೋದ್ರೆ ಅದಕ್ಕೇನು ಎಕ್ಸ್ಟ್ರಾ ಕಾಸ್ಟ್ ಆಗುತ್ತೆ ಆ ಕಾಸ್ಟ್ಗೆ ನಾವು ಮಾರ್ಜಿನಲ್ ಕಾಸ್ಟ್ ಅಂತ ಹೇಳ್ತೀವಿ. ಇಟ್ ಇಸ್ ದ ಅಡಿಷನಲ್ ಕಾಸ್ಟ್ ಆಫ್ ಕ್ಯಾಪಿಟಲ್. Next type or next concept of capital is historical and future cost. What is historical cost? History means it is a past cost. It is already the cost incurred for financing a particular project. This cost already incur ಮಾಡಿಬಿಟ್ಟಿದ್ದೀವಿ. These are the costs which are already incurred or which are already been in we are paying for acquiring the funds. So it is a book cost, we can say. It is based on the actual cost incurred in the earlier project. Now it is the actual cost what we are paying for raising the funds. So this is book cost or historical cost, or it is what we can say, it is already incurred cost. Future cost means it is the expected cost of financing in the proposed project. We are taking a project of investing for the project. So whatever the cost we are going to incur for raising the funds for financing the particular project, ಅಂದ್ರೆ ಫ್ಯೂಚರ್ ಅಲ್ಲಿ ಏನೆಲ್ಲ ಕಾಸ್ಟ್ ನಾವು ಇನ್ಕರ್ ಮಾಡಬಹುದು ಅನ್ನೋದನ್ನ we are calling it as future cost. Future cost is the cost which we are going to incur for financing the present project. Expected cost is calculated on the basis of previous experience. That is, future cost is calculated on the base of historical cost. Historical cost provides a light, or it provides a base for calculating the future cost. Last concept of cost of capital is specific and combined cost. Specific cost is the cost of each source of capital. Each source means what? It might be equity. What is the cost of equity? That is a specific cost. Debt, for raising the debt, what is the cost we are incurring? That is the cost of debt. That is a specific cost. If it is retained earnings, then what is the cost of retained earnings we are calculating? The calculation of each cost of source of capital is called a specific. ಒಂದೊಂದು source ಕಾಸ್ಟ್ ಅನ್ನು ಕ್ಯಾಲ್ಕುಲೇಟ್ ಮಾಡಿದಾಗ ಅದನ್ನ ನಾವು specific cost ಅಂತ ಹೇಳ್ತೀವಿ. It is termed as specific cost of capital. ಕಂಪೋಸಿಟ್ ಕಾಸ್ಟ್ ಮೀನ್ಸ್ ವಾಟ್? ಇಲ್ಲಿ ನಾವು ಸ್ಪೆಸಿಫಿಕ್ ಕಾಸ್ಟ್ ಅಲ್ಲಿ ಒಂದೊಂದು ಸೋರ್ಸಿನ ಕಾಸ್ಟ್ ಅನ್ನು ಕ್ಯಾಲ್ಕುಲೇಟ್ ಮಾಡಿ ಆ ಸೋರ್ಸಿನ ಕಾಸ್ಟಿಗೆ ನಾವು ಸ್ಪೆಸಿಫಿಕ್ ಕಾಸ್ಟ್ ಅಂತ ಹೇಳ್ತೀವಿ. ಕಂಪೋಸಿಟ್ ಕಾಸ್ಟ್ ಅಂದ್ರೆ ಇಟ್ ಇಸ್ ಅಮಾಲ್ಗಮೇಷನ್, ಇಸ್ ಅ ಮಿಕ್ಸ್ಚರ್, or we can call it as an addition of all sources of capital. So that is addition of equity cost, debt cost, retained earnings cost, preference cost. It all combined cost is called composite cost of capital. So it's also called as overall cost of capital. It is used to recognize the total cost associated with the total finance of the company. So whatever the capital structure is designed by the company, what are the different sources of capital we have raised? So the cost of each source that we are adding to get the total cost, or we can call it as a composite cost. So students, this is about the various concepts of cost of capital. So thank you.